everybody, it's Chris here from Student Education with the 4 Majors Analysis Update for the 3rd of May 2011. Hi guys, I hope you had a fantastic long weekend with bank holidays and royal weddings, etc, etc, etc. But back to business. It's Tuesday and we're just having a look at the CTC on the Euro pair. Let's have a look at the daily time frame. Extended uptrend. Well, you can all see that. Previous pullback to a prior resistance and a bounce to the upside, and since then we've had the pair trading higher, breakouts of 14,500 has seen pair consolidate above this area and push higher, but recently we've seen price hesitate as we got higher to a test of 14,900. Let's have a look at the weekly chart. You can see as we inch higher and higher to prior highs, roughly around the 1500, which will be the all-time high. You can see that a lot of resistance in the past, from the latter part of October right through into the early part of December. That's a number of weeks, months, apologies. We've seen 1500 being the resistance level in the past. So as we inch higher towards that area, we can see price slowly hesitating. I'll go back to a daily chart. You can see number of shooting candles, shooting stars, indecision candle on Monday. A range, but very indecisive on the close of play last night. And the Asian market, exactly the same thing. We saw price revert to the downside, test the 1400 and 800 mark, which is, if you're going to 4-hour chart just now, is a very strong support area. But CTC is still in our favor, so we're seeing a bit of consolidation as we head towards the 1500 mark. I'll show you that 4-hour time frame. You can see the box pattern occurring. It's definitely between 400 and 1480. Notice that support, and the high at 1490. You want to take the wicks into consideration, or you can take the bodies. There again, you're looking at roughly around 1487-ish, 8700. Definitely a box here. So what do we need to see? We obviously need to see a break and close higher than the box to see further extensions to the upside. Take note that 1400, 14500 is the all-time high long term, or we need to see a break and close lower than that to confirm that we're now seeing consolidation at this area, and we're going to see a pullback occur. Notice the CTC is still in our favor. We're still trading above all the moving averages, even though on the 20-minute moving average we're now testing that range, but well evenly spaced out on all the others. And if price had to break below 1400 and 800 and close, then obviously our next port of call would be the prior support and resistance roughly around this 14700. There's a stronger one roughly around the 14500 mark, which is where we saw a lot of support and resistance in the past and the breakout occur. And below that there's a bit of a band, so we could see anything between 14500 and the 14400, which will take us to the 200 period moving average. We could see a band there, and then roughly a break through that would take us right through below all the moving averages. And if that was the case on a 4-hour, then we'll be trading a really negative setup, and the CTC should be well in order for shorting opportunities. And then we could see price revert down to 14200 and lower. So at the moment now you can see we're trading in a band. So ideally what you want to do is you want to box it. We don't want to be trading these box patterns, because you just get caught in a whipsaw. And as I mentioned previously, we want to be trading extensions, breakouts, etc. So what you can do is you just box it and then put your alerts on either side of that and just wait, bide your time. And when the moment presents itself, then we take it. So as it stands now for Euro, what we're doing is we're waiting, we're biding our time, we're waiting, and we're going to wait for either a break to the downside, so a close below 14800, or a break higher than 14900 to give us either a buy or sell signal for today. On our smaller time frames, you can see the CTC is negative. We've had a bounce just recently on the Asian market at the Look around here, we've seen some bounce at 1478.50, and we've headed up to that. So, and that's bounced on the 200 period moving average. So the 200 period moving average on a 30-minute time frame has actually come to support this pair, but be aware though that we need price to be trading well above 1487.00 or the 1490 mark in particular. We don't want to be. You can trade that distance between here, but personally, it's crazy. Rather be trading breakouts, etc. And until such time, then I've got my alerts on either side of that, and I want to be trading the definite breakouts for these pairs. Next up is sterling against US dollar. Good old cable. Let's look at the daily time frame. Here again, also pushing higher. Nice pullbacks, continuations to the upside. Pairs well on an uptrend. Moving averages well spaced out. You can see the trend lines, intermediate trend lines. The one latter is quite strong to the upside, trading well above the 1600 mark, which was the major support and resistance level for this. Then we had another one at just over the 16400 mark, the eventual breakout of that, and then we've seen price push to the upside. Just going to do a quick look. Tested the 61.8 fib area and pulled back as we said. We're seeing a indecision followed by a very indecisive range of candles here. As you speak now, the close of yesterday, we saw a clear indication of an exhaustion candle where price action is taking place towards the end of the bottom end of the candle. Even though we had a bullish candle on the previous trading day, but very indecisive, these two candles here, or three candles in particular. And Asian market and European session open this morning are seeing price pull back even further. We're now trading or testing this trend, the swing. So ideally we want to see this support area here where the 50% fib area is at the moment. If I can just make that nice and thick. That there has been 1, 2, 3 days, 4 days as a strong resistance and 3 days of support at roughly the 16. What are we looking at here? 16. If I can zoom in, 16,6300. So looking at intraday, should put that in 16,300. Price is broken below that. Now it's trading lower than that. If we see price failing to break higher than that level there on a 4-hour time frame, it's trading below the 20 period moving average. This is an interesting setup, this guys. We've seen support. And then you'll notice that price action, the high is getting lower than the previous one, even though CTC is still extending in our favor. However, the highs are getting lower, and if that's the case and we see it close below that level there, then what we could see is a breakout, pullback, and continuation to the downside because of that. I hope you can see that. So on a smaller time frame, this might be an opportunity for a potential setup to go short, even though the blue showing on this time frame. However, trading lower than a previous price support or strong support over a number of days is confirming that we could see bearishness creeping into this, and we could see potential downside movements. There we go. Support, breakout, pullback. And what we could see is 200 period moving up to 1656 being our next protocol for this pair. Okay, so intraday, there we go, zoom out to raw 6300. You can see that now that 200 period moving average has been breached, it's pulled back, it's hesitating now at that level, and if we don't see price revert back and close at least above the 6400 mark, and the CT is in our favor, then what we could be seeing is literally momentum shift at this level here, past couple of days running out of momentum, and we're going to see a break to the downside. So be aware, just keep your hands next to your side, wait for confirmation, break lower, close lower on the 30 minutes, and ideally the 30-minute candle needs to close lower now, 1663.100. Then the 200 period moving average and that area there, confirming downside. You can see lower swings as we go into the European session open, and the CTC is negative. So what we need is just a confirmation close lower. There we go. Just make sure that line is in, so you know exactly where that 6300 is, because it's a long-term support and resistance, and it's broken below that support now. So what we want to see is a definite close lower, confirmation. You can see the major swings are to the downside, so we know that the momentum is shifting now, and recently we've had a lower swing. This one's still lower than that, so if it closes lower, then that's all important support area. And then what we're doing is we're trading for the first time below a support area for a number of days, and it'll just confirm that there is bearishness creeping into this, bearish sentiment. And if that's the case, then what we should be looking for is definite opportunities to the downside. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame for this. Very much an extended downtrend. You can see that CTC is well in our favor, trading below a previous breakout and support area here at the 890 mark. And since then, we've just pretty much been in a negative trend, pretty much swinging back, and falling to the downside. So this pair pretty much still to the downside. Hesitation yesterday, very indecisive in doji. That's pretty much most of what's happened with the four majors recently. And what we want to do ideally is we want to see a decision candle now taking place, whether it's to the downside or to the upside. We're going to have a look at it in the intraday to see that. If you look at the hourly, for example, you can see that indecision pretty much showing you price trading sideways now, as momentum is still moving to the downside. So you can see the lower swings in this pair as we moved. Slight breakouts every now and again, but not trading higher than the prior strong resistance support levels, and still trading below all the major moving averages, confirming further downside movement on this pair. You can see the 50 period moving average acting as a great ceiling level for this pair, and we're now being squeezed. So as long as the US dollar can find support at this 863.500 mark, then there's a good opportunity that we might see price break to the upside. However, it needs to obviously trade higher than the trend line. It needs to break the trend line and close stronger than the trend line. Ideally closing higher than the prior area of support and resistance, in this case the 86900 mark. So break higher than this, but it needs to be trading higher than this to confirm. All of this now is just one long wick, and what we're seeing is a hammer. Price is hammering at a bottom, and then we could see price revert to the upside and test price support and resistance areas. There's a noticeable one here at the 200 period moving average at 0.876. There's another one, quite a strong one, at the 88550 mark, and some further up to the upside. But if it's trading well above 876, then we know we're trading above the 200 period moving average for an hourly chart, confirming a definite bullishness is creeping into this pair, and we could be looking for long-term opportunities to the upside for the remainder of this week going into next week. As it stands at the moment now, we still need to see price break all important trend line to start with, then trading above 869. Until that happens, CTC will still be showing negative, and we should still be looking for opportunities to the downside. So as it stands now, to see further confirmation that there's more momentum to the downside, price would need to close lower than 864 or 863 in particular, and we should be looking for opportunities or indications of possible targets, and we could be looking at roughly around the 855 mark for this, 858.90 mark. That would be the next target roughly. Last pair of the day is the US dollar against Japanese yen. Let's have a look at the daily time frame. You'll notice that we're on an extended downtrend. Notice the intervention that we saw a couple of months ago didn't stack up. Eventually we saw price revert to the downside. What we're seeing now is the CTC is all in our favor. Moving averages crossover. Everything's pointing for further downside movements. US dollar losing a lot of ground against the Japanese yen. An decision yesterday, and European session open this morning has seen price continue that trend to the downside now after a indecision candle that we saw yesterday. So where to for the pair? Well, as it stands now, we're creeping up to a prior support area at the 8100 mark, not too far off. So we could see a bit of hesitation creeping in now because of that. So ideally we want to see you close lower than 8100 to confirm further downside movement, and if that was the case, then we could look as low as the 79, just below the 7900 mark on a daily time frame. So let's have a look at the intro. So we know that 8100 is a potential support area, so we'll just put that in. There we go. Price is testing it as we speak. Hesitation in the past, so be aware of it. Trading below all the moving averages, in particular a very strong breakout area around the 8240 mark. We saw pullback, and price faded to the downside. CTC is well extended in our favor, it's trading below all the moving averages. So what we're looking for now is a clear close lower than the 8100 would confirm further downside movement for this pair. Momentum is shifting, however. You can see that the drives aren't as strong as they were. If you take a look at that, for example, noticeable downshifts. However, since I'd say the 22nd of April right through until now, you can see the bottoms are quite they're almost shallow. So heads up, this happens when you start getting close to an oversold case. So we could see, if price fails to break lower than 8100, we could see a bottom forming at this area. This my case in point is, look at the breakout here and the one over there. So that was stronger. This one and breakout, they're not as forceful as they used to be. So they are breaking lower, but very, very small. You know what I mean? They're inconsistent. They're not moving a hell of a lot of there's not a hell of a lot of movement after the breakouts occurring, and that's just confirming that hesitation is now creeping in. The sentiment is now changing from very bearish to possibly a bit of a bullish or buying situation. So be aware of that as we creep. We test this 8100 mark. We could see, like this low over here, for example, is quite low to where the hesitation is taking place now. Like that one there is quite far from that one. That one's quite far from. So it's getting quite close now, stagnated. So if we don't see a really bearish sell happening at 8100 for the remainder of this week, then what we could see is price potentially looking for a possible hold here at the 8100 mark, and we could see a bounce. And ideally we could see a retest of the 8150 mark, because we've seen a price support and resistance in this area. So be aware of that. Looking at smaller time frames is the 8100 mark. Price has been trading below it, but you can see price is now trading higher. If it closes higher, then we could see a potential test of this intermediate trend. And if we can grab hold of something up here and find legs, claw its way back up here, then what we could do is we could see price reattempting those prior highs at 8150 and higher. That's for today, guys. Hope you have a fantastic trading day. Make sure you follow the rules of the CTC strategy. Those of you that are watching this for the first time and are interested in this particular trading setup, please get a hold of us at our customer services at sereneeducation.co.uk so we can help you go forward. You might want to benefit from this trading setup, and we can help you get there. Make sure your money management's in place, guys. It's all very well having a great setup and you have some great tools at your disposal. If you don't know how to trade, physically place a trade properly and manage that trade, then none of this is worth it. So make sure your money management is in your favor. And last but not least, enjoy your trading and trade serenely.